Hey, good morning everybody. It's Brian. Hope you're doing well today. It's Thursday, 25th of June, here for a quick update. Sorry about yesterday. I was having some issues with getting everything to connect. I'm still not sure I'm actually connected everywhere I had been connected to. So this might just be going to Facebook. If it is, that's fine. There's changes that need to be happening there anyway. I mentioned that before. I'm doing I've got a couple of side projects going on. One with a friend of mine to release a project called Passive Income Trader, where we've got some automated systems that we're going to roll out, and another that's just simply the breakout process that I've always been talking about here, that another friend of mine with a really large list and kind of a lot of connections to the industry is planning to help me publish. So we've got both of those arms going on. So at some point there's going to be some changes here to the actual make money from your laptop, because what I can talk about and how I can talk about it, it'll be a little more restricted once those projects launch. So anyway, with that said, I mean, for right now, we're going to continue business as usual until everything launches, and then we'll have to make changes here to restrict kind of more about what I talk about. But that doesn't change what we've been discussing already, and we'll still discuss that stuff to some level here as well for free, because I really want to keep the free stuff active. I feel like that's really important. It's a good resource. It's something that a lot of you have found just through internet searches and kind of organic traffic, organic ways of finding this site. And I want to keep that for you, because it's what I'm passionate about, which is helping people wade through all the bullshit that's out there and realize that simple stuff works as long as you work the simple stuff, So anyway, with that said, without getting off on a tangent with all these different things, let's just get on into the things that we need to be discussing this morning, and kind of get through how the day is going to look and what we're going to be looking at for the day. So first things first, always want to look at news, not necessarily because we care about what this figure is going to be over here. We're not too concerned about what the figure is, because remember, as I've discussed before, we can see a figure come out as highly positive or highly negative as the actual number in the report. And sometimes the market reacts, sometimes it doesn't react. Sometimes it reacts in a way that is in line with what we think the market should do when that number comes out. And sometimes it does the absolute opposite. So it's a crapshoot, right? There's a lot of randomness in it, and there's a lot of factors that are driving the market other than whatever that figure is, right? And every time anything is released, anytime there's any kind of a news event in the marketplace, trying to make a decision solely based on that news event is a really bad way to go, because ultimately what it does is it creates a bias in us that takes us away from what's actually happening on the charts, and takes us away from whatever our trading system, our trading method says that we should be doing. And at the end of the day, the only thing that's really consistent, I know I sound like a broken record, I talk about this all the time, but the only thing that allows us to really be consistent is that trading method. So the consistent application of whatever method that we choose to trade, whatever trading plan we have, the consistent method of that is what gets us the long-term results. And really it's that, and it's money management, right? Everything else, you can flip a coin. You can flip a coin and be successful over the long term, come out positive over the long term, if you use good money management. So money management is probably the biggest piece of really what's going on out there. But the other stuff, consistency, it gives us an edge as long as we're, what we're looking at and how we're looking at it is subjective to every person. And we can build a system that, and we'll get to this in just a second, but build a system based on support and resistance, based on trend lines, based on Fibonacci's, based on Bollinger Bands, based on Ichimoku clouds, based on whatever you want to base it on. There's thousands of indicators and infinite combinations of how you can combine those indicators together. So all of those things aren't there to give you wins every single time. They're there to give you a way to filter the market. You look at the market through different filters, and when you see something seep through those filters, that's your trading opportunity, and that's what gives you the consistency and gives you that edge. The edge is created through looking at things the same way every time, and then having good money management when you execute that, meaning, take your losses. If you're going to have a loss, take it quick, and let your wins go to 2x at a minimum, 3x of whatever your initial risk was. Everything else just kind of falls into alignment, which I know goes against all the stuff that you see online with, buy this system, buy that system, this system's the best, the system's going to give you this win rate and that win rate, blah, blah, blah. Whatever. Anyway, let's go. I'm getting off on tangents this morning. Let's just go to this. What's happening as we get started for the day over here in the foreign exchange land? Well, we've got some movement. We've got the pound as the stronger currency as we're kind of getting underway here during this start of the U.S. session. We've got the yen and we've got the euro as potential weak currencies down here. I did park a trade on the pound yen already, and I'll go over that in just a second. But just looking here, pound versus the yen, pound versus the euro. If we go to the euro pound, that's already moved. I mean, that's moved 63 pips for the day. The average is about 70, 67. So, could it move more? Absolutely. It certainly could move more. There could be some catalyst that drives both of these. What's the likelihood? Because we have to consider that whenever we take a trade. That's in any market, not just here in Forex. That's in every market. When we're looking at what we're going to trade, we have to consider, not only the momentum, the directionality, the potential directionality of that instrument, whether it's a currency pairing or a stock or a cryptocurrency or whatever it might be. It's the same. We have to consider the momentum, number one, the directionality, potential directionality of that. But then we also have to consider, when we put in our risk and reward, how likely is it to go as far as we need it to go in order to hit that reward? We've got to consider the likelihood of that trade. So, ranges are a great way to give that some consideration. How far does something typically move? And again, it's averages, right? Because the average, in order to get that average, you've got days that far exceed that, and you've got days that are far smaller than that, which actually is a trading plan in and of itself, which is called mean reversion trading, but we won't get to that right now. It's a whole other can of worms. But considering how likely is it to move to your target when you set that target? I mean, it's great to say, I'm going to have if you're trading the S&P, I'm going to have a 300-point target. Okay, what's the likelihood of it actually getting there, before it moves to your stop? I mean, could, sure, but, we know things kind of move up and move down. That's probably unrealistic. So base it on something that's quantifiable, base it on something that's actually realistic. In this case, for the euro versus the pound, we can look and see, well, it's already moved 63 pips for the day and the average is about 70. How likely is it to actually continue moving further? Probably not that likely. Is there something that's got more likelihood of actually moving? So then we could look over here and say, well, yeah, maybe the euro, maybe the pound versus the yen has a little more likelihood. Does it? Yeah, maybe. It's moved 80 pips for the day, and the average is about anywhere from 160 to about 160 pips. So is there opportunity there? Yeah. The other thing is we're kind of caught in a range right now. We're looking at the top of this because the pound is strengthening. It's a stronger currency in relation to the others. So, we're looking for it to break through the top of this, which it just did. And it's just broken through here, and we'll see if that continues on and ratchets off some risk. But, we're looking at that to continue potentially moving. One thing that didn't line up, and now that I look at this, well, I guess it lined up when I clicked that button to take that trade, is the volume detail. The volume detail this is a time segmented volumes. It's just simply looking at volume as it relates to price and then giving us a red or a green indication as it's relating back to price over that period. So what we're looking at here is to see, okay, if we've got kind of a movement in the positive direction and we've got positive momentum here, does the volume detail support that move as well? And initially when I clicked this button, it did. Right now it's actually flipped over to red. So that's a conflict for us. I mean, ideally we'd like to see everything lined up here in the supporting that green, supporting that positive movement. So anyway, we've got I put this on. We'll leave it here, see what it does. maybe it moves on and continues on from there. One thing you can do if you're using the breakout box, it would make it a little more, I don't want to say accurate, but a little more customized, would be to paint the boxes based on the intraday trade range, average trade range for this whatever currency pair you're on. So I just have a static 20 pips across all of these. But you could customize it a bit to look at what the actual trade range is, and then create your breakout box based on what the actual trade range for that specific pair is, because then it would be wider depending on currencies that are more volatile and thinner on currencies that aren't as volatile, which would add a whole other level of potential positivity to the probability of success on those trades. So just something to consider when you're looking at that. All right, moving on over here to the futures market. What's happening in the futures market? Looking at S&P to begin with. We've crossed over as this candle closes. If it closes negative here, we'll be confirmed in a downward bias on the 4 hour. So the 4 hour and the 30-minute would be in agreement at that point. We had a big move down yesterday, and we've hit kind of a little bit of a channel here, and we've got news coming up in 30 minutes. Remember, we've got our durable goods, final GDP, unemployment claims, trade balance, wholesale inventories. There's a lot of news coming out. They're not listed as high impact, but given the current state of this market, even these medium impact reports can be higher impact for us. Sometimes the market just needs a catalyst. Yesterday there wasn't any real catalyst yesterday for the movement, other than all the negative reports of coronavirus cases increasing in some key states, and that prompting a lot of panic. You've got that combined with the kind of looming error over the market, and that was a good catalyst for things to move. I don't know. At some point, and this is where my personal bias always comes into play, but I have to kind of squish that down and just look at what's happening on the chart. But in my personal bias feels like we need another much larger correction. There's still a big disconnect between what's happening here and what's happening here, in the actual real life. But anyway, that doesn't really apply. We need to focus on, the only way we can be consistent is to focus on what we're doing when we actually step into trade. So what we're looking at when we're trading here is, if we're looking for selling opportunities, which if we're in a short bias, we'd be looking for selling opportunities. And to sell, we'd be watching for a couple of things. Either a pullback, back to this 30-35 area. So pulling back up to a key area here on the 4 hours, just 30-35, or a break down here below, this 30-20 area, which is setting up as kind of an intraday support level. If we look over here, at 30-20, I saw it move there yesterday, repel off, tested again in off trading hours, break through it, couldn't close through it, broke back above. So 30-20 is really setting up as a key area down here for the S&P. So we'll see what happens on and around news, and then obviously we want to wait until we get into the live trading hour, regular trading session. But 30-20 can certainly be an area to watch if we break through it. So we've got a couple of things: either a pullback, again 30-34, 30-40, or a break through 30-20. If neither of those occur, then obviously the other piece is to watch intraday on a shorter time frame and see if we get a pullback where we can make an entry based on in this case, since we're short, we'd want to see higher lows. So watch for a close of a previous candle with a higher low and a higher high. Higher low, higher high, higher low, higher high, and then trail our entry in based on the bottom of that previously closed candle. So another way to go. But we'd be looking for short positions until, or if something changes, right? But we'd be looking for short positions until our biases are mixed again, right? All right, over here on crude, what's happening on crude? Another big move down yesterday. There was crude news, not necessarily crude news, but news on crude, and I guess crude news too. A lot of the media is filled with crude news. Anyway, that's me being a nerd. Mixed bias here. 4-hour bias is still long. 30-minute bias, we definitely pulled back, and it's short. So we've got a mixed bias on crude. So that just tells us right now, let's sit on our hands, not do anything there. Gold mixed bias as well. Big pullback yesterday on gold, and 4-hour bias is still long, but the 30-minute bias is flipped and it's mixed on us. So not really much to do there. So we've got potential opportunities, though, short opportunities to look at over here in the S&P. All right, moving on over to the crypto land. Caught in a channel here as well, a little wider channel, I think, than what we might be used to seeing on this. But we keep hitting our head at this top over here on Ethereum. 245. It just seems to be a very strong top that we just can't seem to break through and close through. So, hey, where did my lines go? There we go. But we are still in an upward bias here on Ethereum. So we still are looking for long trading opportunities until this flips again on us. We're still looking for long opportunities. Obviously, this 230 area has been setting up as a pretty solid support level. We can also look here at this 235 area where we've seen that become support and also resistance for us. Previously, we broke above it, we came back, we're kind of hovering around that area right now. So a little breakthrough 235 to the long side could certainly be an opportunity for us to look at long opportunities if we didn't want to wait for pullbacks. And then even moving higher if you want to be more conservative, waiting for breaks over here, 238, 239, 240 as breaks for this to go long as it comes through here. Flip side is, if you want to look at bottom edge and say, hey, if this thing just really cruises down and breaks through 228 and take a counter trend trade, there's certainly nothing wrong with that. We could be looking at downside after, if it breaks through at the bottom of this channel. But for right now, just looking at the bias on this is long, so we'd want to continue to look for potential long opportunities if you're trading with the trend, if you're trading with that bias, right? But certainly doesn't hurt to look at both sides on this, because this market, the crypto market is way more volatile than anything else, and that's because it's a much smaller market. It's not as heavily traded. There's not as much volume. So when you have a market that doesn't have as much volume, and you've got some larger players in the market, as large orders come in, it can certainly move that market one direction or another very quickly just by the consumption of orders that are out there, or by it can stop the market too if you have a large number of orders that are coming in at a certain level and you have limited volume to consume those limit orders that are sitting there. It can kind of stop the market, stop a move as it takes time to cycle through and have all those orders filled. So just be aware, this can be pretty volatile, which is one of the reasons it certainly doesn't hurt to look at both directions on crypto trades. But obviously for consistency, especially if you're just starting out, you don't have a real plan around how to trade sorry, I lost my train of thought. How to make a counter trend trade? Just stick with trend trading. Stick with trading based on what the current bias is and finding trades in that direction. That's probably the simplest way to go. All the way back to if you read about the turtle traders looking at trend trading with directional bias. I mean, there's probably not a simpler way of looking at taking trades into the market. So anyway, directional bias there long still. So we'd look for long opportunities until that flips. Bitcoin has flipped on us. It's changed over to a short bias again, and it seems to be struggling down here though around this 9175, 9200 seems to be finding a support level here. You might just be a little bit patient, but technically, if you wanted to look for these short opportunities, if it breaks through this 9100, which is kind of the bottom edge down here, if it breaks through 9100, that'd be a good spot to look at going short. If it starts to pull back, that'll change your bias, so just be careful of what's really going on there. So if it starts to push up, watch what your directional bias changes to, and you may start looking for long opportunities there, which is kind of coming back to, if you're looking for breakouts on this, looking at bottom edge, top edge, and you could really kind of be looking here around this 9,500. If we broke through that, that might be a good opportunity to take this thing long again. So anyway, there's some trading ideas for you, some things through the day, just opportunities of what I'm looking at. And I think that's hit everything. If you have any questions, let me know. I'm certainly here to help. I love helping people. That's why I started the channel, is to help folks kind of wade through all the BS out there. Again, there is no perfect trading system. The trading system that's perfect is the one that you're actually going to stick to. So if you have something that you want to run by me, send it over. I'm happy to have a look and kind of talk through some of the pros and cons for you and give you things to look at and help get you down the path of creating your trading plan, because that's paramount. You'd be surprised. Well, maybe you wouldn't be. Maybe you don't have one. So many traders don't have a plan. They have no plan of what they're going to do in the market other than, I'm going to trade today. What are you going to trade? How are you going to trade it? What are you going to do if this does this, if that does that, if so on and so forth? I don't know, but I'm going to trade. I'm going to walk in and I'm going to see what's happening, and my gut's going to tell me what to do. That's most people's plan, unfortunately. Or they have a little bit of a plan and it's not well thought out, and that's why they deviate from it constantly. So a plan, have a plan, trade your plan. And if you don't have a plan and you're thinking through a plan, I'm happy to help you with that. So just shoot me an email, send me a Facebook message, whatever. All right, that's it. Have a great day. Talk to you later. Bye.